Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite significant level of previous monthly resistance turn support. Now, as the market is testing this previous resistance turn support, we could expect a rejection to the upside to be created away from this area. We can also notice that if we zoom in, from a pattern standpoint, what we have is the creation of an impulse and correction. And as usual, if we have an impulse and we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have a 0.618 and 0.786 Fibonacci retracements lining up precisely with this previous resistance turn support, creating confluence of support at this level that we could expect this market to potentially reject to the upside. So here on the monthly, everything looks quite bullish. Dropping down on the weekly, we can see how from a weekly standpoint, we have a market which is currently testing a very strong weekly structure. From here, we had all this rejection to the downside. The market has now broken back above the level. So this previous weekly resistance is now turned support here, and currently, as the market is testing that zone, we could expect some bullish continuation to be created away from this area. So also the weekly time frame looks very bullish. Dropping down on the daily, what do we see? Now, from a daily standpoint, first of all, I did speak about GBPUSD a few days ago when the market was around this area, and I made a full breakdown explaining all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. However, now it's time to reevaluate what kind of structure we have from a daily perspective and see where we could be looking for the next potential move from a probability standpoint on this pair. Now, before we continue with our analysis from a technical perspective by looking here at what we have on the daily, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. Now, if we check the data for the pound, the first thing that we have to keep in mind is that by checking the data for the pound, we are actually already checking GBPUSD because all currencies on this spot are traded against the USD. And what we can see is that with the last report, we went from having 47k net positions up to 59.1k net positions, showing a strong increase of the net positioning with 7,500 longs added with the last report and almost 600 shorts getting closed. This shows how institutions are moving to the bullish side of GBPUSD, making it stronger. Now, with this in mind, we have to also notice how we currently have way more longs than shorts from an institutional perspective already, with 98,000 longs compared to only 38,000 shorts. Now, moving back to the technical side of the market, what we must identify is that even though everything looks bullish on the monthly and weekly and from a COT perspective, on the daily time frame, we are currently still below resistance. This is previous daily support from which this move to the upside was created, which is now turned resistance here. Until the market will remain below this level, it can easily continue lower. However, what we know is that the best probabilities in the market come when all the time frames are showing the same direction. And since the monthly and weekly and COT data are bullish, in order for all the time frame to show the same direction, we need to see also the daily time frame become bullish, meaning that we need to see a break above this resistance. Only if we get the break after the break on the retest of this previous resistance turn support, this is where we would have good probabilities of seeing institutional longing of GBPUSD continue, and essentially the market to reject this structure support area to the upside. So until the market will remain below this level, it can easily continue lower. However, if we get a break above that zone on the retest, how we could be approaching this potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to the entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment the time to join is almost over, so I really suggest that you go on the website as soon as possible, and directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.